Hello again, everyone. In this technical analysis of the stock market video, I called it Rising Fear because that's exactly what we're seeing in the marketplace. This whole fear from this coronavirus coming out of China that seems to be getting worse and worse with every day that passes. And Friday, all the markets kind of capitulated, and the VIX exploded to the upside in a pretty big move to the upside. What I'm going to do is I'm going to talk about the Dow Industrials today, and talk about the daily, the weekly, look at the Elliott wave picture. And then I'm going to share with you a 6-minute segment from the video that I created this weekend for my members, where I looked at the various indicators, the key indicators that we look at almost every day, and thought I'd share that with you. Something I rarely do in terms of sharing exact clip from the membership video. But I thought, this is a pretty interesting juncture. We'll see what happens here. All right, let's start off here with the Dow Industrials. Dow was down 170 points. And it's really interesting. The Dow was down 170. And you had Intel and American Express really up pretty big on Friday. And let's see. And Boeing started to turn around in the middle of the day. I think Boeing is actually what defrayed this a little in here, because this was down, you can see right here, the low was 843, 28,843. So we were down another 140 points or so below this. So around 300 points at the low. So pretty negative move to the downside. We're closing below that 10-day moving average in here. All this divergence is maybe finally coming home to roost in here. And you can see we had it here with DI Plus also. So we'll see what happens. An interesting look that I'm seeing on the weekly chart is that when you look over here on the weekly chart, down 358 points for the week, this looks like a candlestick pattern called Harami, a two candle pattern in here. And this can lead to a reversal. It can be a reversal type pattern. So, when I saw this, and I'm seeing this in all the major indices, okay? And so we break this low, last week's low, which was really Friday's low. And I think we could be into a pretty good little reversal and sell-off. I've been looking for this to happen for quite a while. I've been looking for this to end. I've been looking for this C wave to finish. Talking about this C wave of this third wave. Now, what's going to be interesting is a couple of things. Number one, the Dow hasn't stretched to 29,664, which is what's needed for an expanding ending diagonal pattern in here. Okay, so if this breaks down out of here, then I've got to sit back and say, okay, something else is going on, and it could be this bigger corrective pattern that we're still in, that it could be this big flat that we're in. And, the B still fits. I don't like the way it's taken so long for this B to materialize, but there's no law or rule that says it's got to be X, Y. It's got to be a certain length, or, it can't take any longer than, a certain time. Now, one thing I looked at is when you look at B comparing it to A, in here, it's at right almost exactly at the 100, slightly above it, but right around that 138% of A. And what's interesting is that's a guideline, an Elliott wave guideline, that you look for B to B to retrace 100, here would be 100, all of A, right back up here, 100% of A, to 138% of A. Okay, that's kind of a guideline. Well, we're right there. So it's going to be interesting to see if when we start to sell off in here, what are we getting? What kind of wave structure? What kind of sell off are we getting? Now, back with the the S&P 500 and the Nasdaq, they all reach that minimum required to do the expanding ending diagonal. So we'll see what happens in terms of the pullback. We break this trend line in here. I think we're definitely underway in terms of the sell off here on the Dow Industrials. Okay, so that's the picture there. Let me go to that. Now let's go to the video clip where I start off looking at the VIX. Okay, so the VIX really got a pop on Friday, up 1.58, closed above the entire range of Thursday, and we penetrated that initial trend line I had in here. It's a 4-month trend line from October. Looking at October's highs, December's highs, January's highs, and we started to break it and then we backed off. But it still looks like this could be the start of something, and this is the way you get going. And, you know, we stayed above that 10-day moving average for 3 days, and then now, boom, it'll be interesting to see. We get follow through. Do we come up to this next trend line up here at like 18.5, close to that? And do we break it? So I think if we break this longer term trend line, I've talked about this, I think if we break that, I think we have a major explosion on our hands. Okay, so that's what's going on with the VIX. Let's take a look at the McClellan oscillator. Okay, so there's a couple things happening in the McClellan. Look how negative now all of a sudden we came down. The breadth was very negative, and it was really negative, almost 3-to-1 on the NASDAQ. And we'll look at the NASDAQ oscillator in a second. Now, this is down here at minus 99.96. It didn't take out this December 3rd low, but very, very close. I wouldn't be surprised to see it take it out on Monday. Okay, so you know, what I was looking at in here was these higher lows. We did take out this January low, but that was pretty close anyway, and it was kind of hugging that center line. I think this one is kind of key. You know, we got this divergence that didn't confirm the move in the market, and then now we're getting a breakdown. And when you look at the NASDAQ oscillator, it did shatter that low. So it broke this whole series of higher lows in here, and I think this is pretty negative looking type implications and picture. And even though this went slightly higher, 92.31, this is 85, it looks almost like this is like hit a resistance level in here. Okay, and now we kind of smashed down through all that, and looks pretty negative actually for the NASDAQ. So it'll be interesting to see. You know, when you see this kind of thing, and then you see that tight little harami pattern that we just talked about on the NASDAQ composite, you're like, okay, this whole picture starts to fit. I love it when when the indicators start to coincide and fit together in a picture. All right, on Friday there were 66 puts for every 100 calls, and it ticked that 10-day up to 0.52, but it's still bright red. I still color it bright red in here. So we still have this bullish exuberance on a 10-day pattern that exists coming out of the options pits. Okay, it hasn't turned extremely bearish, at least not yet. Now, when we look at the percent of stocks above the 50-day moving average, look at this break. Okay, this looks like the start of something. This looks a little more severe than this, but we didn't come down as low as we got on December 3rd. And then, you know, we did break this trend line. We came out of this pattern. The other interesting thing I was looking at, this almost looks like a little, let me get rid of the crosshairs for a minute. Almost looks like a little bit of a double top in here. And as with double tops, the classic, you know the top is in when you close below the valley in between the two tops. Okay, well, that's exactly what we just did here. So that's why when I look at that and I see that, I'm like, okay, I think maybe the top might be in here. Okay, and let's see, I was looking back somewhere. I saw it where it jumped out at me. Kind of like right in here. And where is this? This is September of 2018. Okay. So you had this little rounding, this little pattern, and then when we closed below that low and we broke the trend line, and then this is all the selling of October 2018. Okay, then the rally back, and then the December downdraft. So watching to see what do we get in here now. It looks like it may be the start of it. Okay, let's take a look at the short-term trading index. So here's another indicator up here, 2.43. We haven't seen this kind of reading in months, okay? You know, just because we got that high of a reading doesn't signal a bottom by any means. So keeping an eye on that. Look how the 10-day has all of a sudden exploded to the upside, 1.34. So we're not at an extreme just yet. If you look back, Where's this? This is August. So see how it got above that level? Okay, so here's August. So, and we had 2 out of 3 days that were well above 2. We got the close here at 2.1. Then we got this close here at 3.81, very close to the high. And sure enough, that was the bottom, I believe, back then. If it wasn't the bottom, for that sell-off, it was very close to it on August 14th. Okay, so keeping an eye on this for getting that extreme selling. Now, we didn't get a lot of extreme, on the high-low. Actually ticked up a little bit. That could be because of the comparisons to a year ago, not sure. But 172 more stocks hit new highs than new lows on the New York, and 136 on the NASDAQ. So kind of surprised actually that it didn't go below 0, but I think we have another big downdraft on Monday. I wouldn't be surprised to see these well below 0. Okay, so that's the picture there. Okay, I hope you found that helpful and interesting. There's a lot of stuff going on right now. There's a lot of moving parts right now underneath the surface. And so here we are back with the Dow Industrials again. And if you found like the video was helpful, please give it the thumbs up. And if you're not a subscriber, hit that subscribe button. And if you'd like more of this kind of information, head over to joehenches.net. Beyond the Chart, that's the website. Here's the picture of it. Here's where we're at. And check out my recent post where I'm talking about Fibonacci levels can become hurdles. And I look at these key Fibonacci levels on the Dow Industrials. Check that out. All right, everyone, that's it for this weekend. Have a great weekend, and we'll see what Monday brings.